Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced within a range and then eventually broke below most of the overnight balance and tested the 87 quarter to 89 quarter pre-market support. Bigger picture, ES has been balancing within a pretty narrow range overall and is setting up for a directional move. And at this point, heading into the open, we'll be watching the pre-market support at 87 quarter to 89 quarter and pre-market resistance at 92 half to 94 half. If ES continues holding below the 92 half to 94 half zone, that would indicate continued selling pressure short term, and it could actually lead to an eventual break below the 87 quarter to 89 quarter area. And that's really a pretty key zone at this point because of the recent 2-day lows right over there. So if we break below this 87 quarter, then we can actually get some acceleration on the downside and get some long liquidation down into at least the 79 to 81 half initial support, at which point, on first test, buyers can still be active because bigger picture, we are still in an uptrend, and a short-term liquidation break wouldn't necessarily reverse the entire upside move that we've seen over the last couple of weeks. So, the idea is that the market is balancing and setting up for a directional push. As long as we're holding above 87 quarter, 89 quarter, we know that this entire structure remains intact over the last 2-3 days. But the overnight session has been relatively weak, and for that reason, we do have to be careful on any long setups here. And 92 half to 94 half could actually present a short trade. It's something that we'll have to gauge as we actually head into the open. The weakness or strength on the advanced decline will provide a pretty decent heads up on whether this overnight weakness that we've seen is something that can sustain in the day session, or if we're simply just, still balancing within a range, and, in which case we can technically still go in either direction. But the overnight session has been relatively weak. And, we've also seen over the last few days that we're not really seeing a lot of broad market participation in this upside move. So the advanced decline has been pretty mediocre. The NYC tick has been pretty mediocre. And, at the very minimum, it's showing that there's not a whole lot of buying interest at these higher prices. So, today we do have to be a bit cautious on the long side here as well, unless we start seeing some major signs that this is just simply short-term balancing before a continuation move to the upside or before a upside breakout. So the first sign of strength would be a break above 92 half to 94 half. That's the absolute minimum that we'd have to see in order to really consider the buyers still maintaining some decent control here. And as long as we continue holding below 92 half to 94 half, that strength is not really going to be present in the market. And short term, if we continue balancing below that pre-market resistance, like I said, it could result in a downside liquidation break. So today we do have to be a bit more cautious on longs because just of the recent, some warning signs, some relative weakness, and lack of broad market strength. Now, on the upside, if we do break above 92 half to 94 half and above the 95 quarter prior VPOC, that would certainly signal strength. And as long as there is some level of broad market participation, or at least a lack of broad market selling, so as long as there's not any clear-cut weakness on the NYCAD, eventually continued balance above the pre-market resistance zone can result in an upside breakout. So you have to be open to a break in either direction, but at this point we are going to be a bit more careful on the longs than we were over the last couple of sessions because of the weakness that we've seen in the overnight session. And like I said, 92 half to 94 half could even present a short setup anticipating a break below 87 quarter, but the real selling is not really going to come into the market until we actually break that pre-market support zone. So as long as we're holding above it, we have to understand that this market is still stuck in a range. It's still stuck in balance, right? It can still go either way. So the confirmation is really going to come once we actually break either pre-market support to the downside or the initial resistance zone to the upside. Then that would mark a short-term balance breakout. Until then, we're stuck in a range. But below pre-market resistance, there is, some more edge on the sell side short-term here. And if we continue holding below it, then it doesn't necessarily mean that we're in a strong market. And like I said, it can result in a downside break. But we do want to see some pretty decent weakness on the advanced decline in order for that to happen. So that's really the main idea heading into the open, is that the market has been stuck in a pretty narrow range, and it has been setting up for a directional move. And today we can finally get that directional push. So if we break below 87 quarter, most likely we'll test 79 to 81 half at the very minimum, and potentially even lower if there's a lot of momentum and weakness in the market. But at the very minimum, 79 to 81 half. First test can still result in rotation. It does not necessarily have to result in a reversal, but it can certainly result in at least a short-term bounce. On the upside, if we break out above 92 half to 94 half, above 95 quarter, that would at least set up the market for an upside break. But the real breakout is going to have to happen above 97 half to 99 half. If we break above here, and there is broad market participation and momentum behind the move, then there is no hard resistance above 99.5. So we can quite easily reach 2109 to 2111 in that case. So the main idea is that we're looking for a directional push, because the market has been just contracting in volatility and range, and typically that leads to a short-term directional move or trend type move. So that's really the main idea heading into this morning. So let's see how strong or weak the market is once we get the open here. Keep an eye on pre-market resistance, pre-market support. That will help you establish short-term directional bias. Again, we're going to be cautious on the long side, and 92 half to 94 half can even be used to initiate a short, as long as the underlying is showing us some decent weakness, because bigger picture, we're still in an uptrend. In the event that we break below 79, responsive buyers can still be active at the support zones below, because bigger picture, we would still be within an uptrend, and this is a very short-term pattern. So those are the main thoughts heading into the open. Let's see if we can get a directional push this morning, and we'll take it from there.